What's going on, Investomaniacs? Your boy Knight Rider here. Today we're going to be talking about Tencent, Tesla, and a little bit of GoPro. Up first, we've got Tesla, a massive Chinese company, a conglomerate of sorts, whose subsidiaries specialize in areas such as entertainment, artificial intelligence, and internet-related services and products around the world. As of 2018, Tencent had the 5th highest brand value on Earth. Their products and services include internet services, payment systems, music, web portals, e-commerce, a social network, mobile games, smartphones, multiplayer online games, which includes a 40% ownership stake in the incredibly popular Fortnite. Tencent also provides cutting-edge financial technology and seamless mobile payment solutions that are helping support the development of smart cities, smart transport, and smart retail. Tencent is initiating a $35 million investment into the United Kingdom banking sector. Now, $35 million is very small beans for a company as large as Tencent with a market cap of over $400 billion, but they're pretty good at the new areas they get into, so if the data looks good, this could be yet another growth area for Tencent. Revenue growth was a whopping 31.5% in 2018, and it's only trading at a 32 PE. I like Tencent. I like the valuation. However, I do have reservations about trading in Chinese companies due to a history of inaccurate financial statements in conjunction with heavy government involvement. I think there are good enough opportunities here in the US where I can trust the financial market and government more. Well, depending upon who's president. However, let's not get into that right now. However, if you don't share my concerns over the Chinese-related part, then I would definitely recommend Tencent. Up next, we've got Tesla, which is a company I love and a stock I don't touch any longer. Back in the day, I used to kind of be one of those guys who's like, oh yeah, I trade momentum, I trade sentiment, and I don't do that anymore. So I don't touch the stock of Tesla anymore, even though I love my man Elon, right, my idol. But the problem is he's like a whole bunch of other people's idol as well, and therefore, boy, just the valuation, kinda high. Tesla is currently caught in Trump's trade war with China, and they are desperately trying to get their Shanghai Gigafactory up to speed in an attempt to get ahead of further potential tariffs. The trade war could hurt Tesla quite a bit depending upon how it goes. Tesla had their annual shareholder meeting last week and had some great numbers. In the last 4 quarters, the Model 3 became the best-selling car in the United States. Now note, the word car is specific there. This does not include SUVs or trucks, as it would not be the best if you include those. But for specifically a sedan, for a car, it is now the best-selling car in America, at least in terms of revenue, but not necessarily units. That dethroned the Toyota Camry, which had held the distinction of the best-selling car in America for like the past 9 billion years, something like that. Additionally, in terms of units, the Model 3 is now outselling its direct competitors, the Mercedes C-Class, the BMW 3 Series, the Audi A4, the Lexus IS combined. Plus, the Model 3 is the most efficient car in the world. Orders for the Model 3, for not only the Model 3, but also the Model S, the Model X, are outpacing production, meaning they have more orders than they can actually get the cars out, although that's been a consistent good is that a problem or good? I don't want to call that a problem. That's a good that's a high quality problem to have, but that has been a thing that they've been facing for pretty much since their inception. Tesla believes the Model 3's total cost of ownership will be comparable to that of a Toyota Camry or Honda Accord. Tesla also predicts to have a total of 1 million robo-taxi capable cars by 2020. But if you follow Tesla, you and I both know you can't always trust Elon when it comes to timelines, right? Tesla's Gigafactory 1 in Nevada is now the largest battery factory in the world, with almost half of global battery production for EV vehicles. Gigafactory Shanghai is slated to begin production of the Model 3 by the end of 2019. Tesla also announced they are actively searching for a European location for their next Gigafactory. Now, I love me Tesla, so again, why am I not touching it? Personally, if I am investing in large cap companies, I want something a little bit more secure than Tesla. Something like a Facebook or a Salesforce would be about as aggressive as I'd want to go. If you want more growth, if you want to take on more risk, then I believe it makes more sense, for us small guys who only have a few $1 million or less in capital that we're working with. I think it makes more sense for us to invest in small and mid-cap companies. It's not until you got a whole bunch of money where you might have to start focusing on more mid-cap and large-cap companies. The valuation at $40 billion just doesn't make sense to me. Now, you can try and justify the current valuation off of revenue, but consider this. Despite having increased its revenues by over 1,000%, I want to say that again. Despite having increased its revenues by over 1,000%, Tesla's stock is lower than it was over 5 years ago in February of 2014. What does this say? This indicates that the stock is not tied to fundamentals. The stock trades off sentiment, and that's not the type of trading that I personally want to do. Having said that, revenue grew at an amazing 82.5% last year. The company turned operating cash flow positive, and margins improved to negative 0.6%. I just don't feel comfortable pulling the trigger on it now and calling it a buy. Up next, we've got GoPro. This one's not going to take too long. GoPro recently expanded their camera trade-in program to include countries in the European Union, and also announced their plan to move US-bound camera production to Mexico. So for GoPro's sake, let's hope that Trump keeps his tariffs off of Mexico. The GoPro Hero 7 is the best-selling camera in the United States digital imaging market, but they have satiated that market and have failed to grow the business elsewhere despite numerous attempts. GoPro is losing money, is free and operating cash flow negative, and revenues are sideways, and it's been like this since 2016. They've lost nearly $600 million since founding the company and have $141 million in debt. Yes, I know you like to use your GoPro. That doesn't mean that the company makes money, nor does it mean that it's ran well, nor does it mean you should invest in it. Anyways, until next time, guys, may the market be ever in your favor.